on the 10th day of July 2017. This week in economics from Numbers Man. At the Bostonred Network, WBRN radio, if I get my voice back here, we concluded the G20 meeting in the German industrial / port city. I believe it's the third largest port city in the world, Hamburg, Germany. It was a meeting filled with many things there. The accords, we'll get to those, were basically pro forma. Many call the meeting the 19+1. The topic of climate change has separated the other 19 industrialized nations from the American nation and its administration under DJ Trump. Thus, we have a pro forma meeting there, at least in the sphere of economics. We'll get to that. We have the jobs numbers from June. They are back on pace with the job numbers of much of 2016. We'll get to those in just a minute. And we also have other information here on the other side of the pond from Brexit, how it's shaping up. As many people know, it is now up to the May administration in the UK to disengage the United Kingdom from the EU. So we'll see how that is moving along, and some other interesting things. One of the things we'll spotlight when we finish the job numbers, we'll talk about universal income, one of our little pet peeves. We've been campaigning since the campaign of Dr. George McGovern back in 1972, quite a while back there. Nonetheless, this is the employment situation summary for June 2017. Non-farm payroll employment increased by 222,000 in June. The unemployment rate was a little changed at 4.4%. 4.4%, 4.5% is considered full employment these days. In June, the employment rate of 4.4% and the number of unemployed persons at 7 million were a little changed. Since January, the unemployment rate and the number of unemployed were down 0.4% at 658,000 respectively. Among the major worker groups, the unemployment rate for adult men at 4%, for women at 4%, also for teenagers at 13.9%, for Europeans 3.8%, for African Americans 7.1%, for Asians 3.6%, and for Latinos 4.8%. Little change there. The number of long-term unemployed or redundant for 27 weeks or more was unchanged at 1.7 million in June, accounting for 24.3% of the unemployed. Over the year, the number of long-term unemployed was down by 322,000. The labor force participation rate, we hear much about that in 2017 as we did in 2016, was at 62.8, changed a little in June. It had to show, I think it was 6.1% in May, so it held more or less where it was. Oh, I'm sorry, this is the employment. I know it didn't work out right. Anyway, the employment population ratio was at 60.1%. That was a little changed in June. It's been pretty constant there. The labor force participation rate, I looked at it, 62.8, but it was up 1 or 2/10% there. The number of persons employed part-time for economic reasons, referred to as involuntary part-time workers, at 5.3 million, little change. In June, these individuals, of course, would want full-time work if they could find it. In June, 1.6 million persons were marginally attached to a labor force, down 197,000 from 2016. That basically means they've looked for a job over the 12-month period. Amongst the marginally attached, there were attached. There were 514,000 discouraged workers in June, little change from a year earlier. The remaining 1.1 million persons marginally attached to a labor force in June had not searched for work or attended school. Now we have two basic studies here, surveys. The establishment survey data we'll do first. Total non-farm payroll employment was increased by 222,000. Employment rose in healthcare, social assistance, financial activities, and mining. Employment growth had averaged 180,000 per month for this year, in line with the average monthly gain of about 187,000 in 2016. So basically those facts are the same. In June, healthcare added 337,000 jobs. Employment increased in ambulatory healthcare services at 26,000. Medical centers at 12,000. Healthcare added an average of 24,000 jobs per month in the first half of 2017, compared with a monthly average of 32,000 in 2016, about 10,000 under. Social assistance employment increased 23,000 in June. Within the industry, employment continues to trend up in individual and family services at 12,000, in child care services 8,000. Social assistance added 115,000 jobs over the 12 months. Employment in financial activities rose by 17,000 in June and has grown by 169,000 over the year. Securities, commodities, and investments added 5,000 jobs over the month. Contracts, may throw that in. In June, mining employment, we've been looking at this, 8,000 jobs added, the most growth in supportive activity for mining, 46,000 since the recent employment lows in October of 2016. Mining has added 56,000 jobs. You see quite a few jobs. This is evident under this administration and the increase in mining and some other things we'll get to in a minute here. Employment in professional services business activities continue to trend up at in June, 435,000. And let's see, has grown 624,000 over the last 12 months. Did I say 300? Excuse me, that's 35,000. There. Employment in food services and drinking places also continued in an upward trend in June. 29,000 there. The industry has added 277,000 jobs over the year. Employment in other major industries, including construction, manufacturing, wholesale trade, retail, trade, transportation, warehousing, information, and government shown little change in the month. So in other words, they were basically stationary. The average work week for all workers on private non-payroll rose by 1/10 an hour to 4.5 hours in June. In manufacturing, the work week edged up 1/10 of an hour to 40.8 hours, while the average was unchanged from 3.3 hours. The average work week for production and non-supervisory workers, 1/10 an hour, they had to 33.7 hours. In June, the average earnings for all workers in private payroll rose by 4 cents to $26.25 over the year. The average hourly has risen by 63 cents at 2.5%. In June, the average hourly earning increased by 4 cents up to $22.03. The change in total farm payroll employment for April was revised up from 174,000 to 207,000. The change for May was revised up from 137,000 to 152,000. With these change revisions, employment gains in April and May combined for 47,000 more than previously reported. This is not unusual for those particular months. That's from the household survey. So let's go back here. From Bloomberg, we have a big, robust headline: hiring accelerates, which we just talked about, but wage growth, of course, is flat, which we just also talked about. While payroll gains were broad-based and boosted by the biggest jump in government jobs in almost a year. Now that we didn't see, wages were below forecasts, even with job rates close to the lowest since 2001. Sustained hiring in June is evident a kind of labor market resiliency that could eventually lead to a strong acceleration in wages. It hasn't happened yet. At the same time, the month's data could also reflect a new graduating class in summer seasonal workers joining the labor force, some likely welcomed by employers who struggle to find workers. No doubt, we don't hear much about that. We, in previous years, heard a lot about summer employment opportunities. And of course, the government would subsidize jobs and create jobs for individuals, teenagers, etc. That we don't hear about. But in many areas, because of the tight labor market, you have school types, high school types working during the summer months until they will go back to school. Some, of course, will continue depending on the laws in individual states. The number of people who went from out of the workforce to employed rose 4.7 million, the highest in data going back to 1990. A lot of that is involved in many things. While wage growth is running below the peak of previous expansions, the figures may be depressed by weak productivity and a retirement of higher earning baby boomers. That is one thing out there also. That is from Amherst Pierpoint Securities. Stephen Stanley there. Needlessly, the report makes a relatively strong finish for the labor market in Q2. Interest rates, the Fed, of course, they are staying put. The view from various economists here. We are in a pretty good, we see a pretty good steady, solid hiring. Well, you do, more or less. We're just not seeing much acceleration in wages. Wages are very, very tight. The unemployment rate picked up for the right reasons. The participation rate ticked up as job seekers come back into the market. Well, that is true. Now, this is it was a 1/10 point. We looked at this earlier here. The participation rate increased to 62.8 and from 62.7. The unemployment rate, that's what they call U6, rose 8.6% from 8.4%, the first increase since January. Figures include part-time workers who preferred, of course, full-time positions, people who wanted a job but weren't actively looking. The measurement known as people working part-time there, we talked about that, rose by 170,000. There are 5.3 of those, 5.33 million, I'm sorry. Private employment gained 187,000 jobs. The estimate had it 170. You're going to see some fluctuation in these estimates, up and down. This time it was down, and that was a medium estimate. After 159,000 increased government payrolls rose by 35,000, the most in almost a year, driven by localities. Well, that is correct, but at the same time, under the present administration, many jobs are not being filled, and some of those jobs are being filled also by contractors, something they don't talk about very much. Federal payrolls rose, factory payrolls, by 1,000. Retail hiring increased by 8,100. Leisure and hospitality, I think we talked about that, was up by 11,000. This is sort of a summary here. And decline, wages showed decline in durable good manufacturing, professional business services, small gains in retail, transportation, and so forth. But those are only temporary things we're looking at here. And again from Bloomberg, this is, sure when this article's out here, but Dr. Yellen's bet on pulling workers back to labor force is paying off. No doubt about that. The unemployment creeped lower in recent years. In June, the U.S. payroll report keeps the central bank on track to raise interest rates more this year, began unwinding the $4.5 trillion balance sheet. That was covered in the last conference of Dr. Yellen. The flow of people moving from outside the labor force straight into jobs jumped in June to 4.7 million, its highest level on record back to 1990. The surge in job holders coming from outside the workforce speaks to the reduction in slack in the labor force. That's from Tom Simons. He's at Jeffries LLC in New York. For the Fed, this is This is a very encouraging sign and fits the narrative that they are going to continue their normalization plan. They are normalizing and moving back. Chair Yellen in October 2017, a tight labor market might draw in potential workers who otherwise would sit on the sidelines, noting that it's possible that the strong economic conditions could partially reverse the supply-side damage that has occurred. Well, possibly. But the latest data also indicates the idea, validates the idea that potential workers may have been on the sidelines. The Fed lifted rates slowly, no doubt about that. Against the backdrop continued to hire, taking on 222,000 new workers last month. Well, that is a normal. If you look at over the past, say, 12 months, about the normal, a little above the normal, but you have to remember that various conditions in April and May. They were down some. As it happened, employers have begun to tap sideline labor pools. The shift has helped to stabilize and now slightly lift. Well, they are in some places tapping these so-called sideline labor pools because it's so choppy. You want to be careful about looking at a month itself. Very true indeed. You can't just look at 1 month. You have to look at a series of months, not only series of months, but also a number of quarters. Normally, a Q1 is a strong quarter, used to be, but depending obviously on the conditions, the winter conditions, inclement weather, etc. And Q2 is a sort of a quarter that we start to move things back. Now, Q3 is a little different quarter. We're into July now. Holiday season is on. And in August, you normally don't see as much activity. It traditionally used to be back to school, but a lot of that was in the retail sector, and you'll see a lot of redundancies coming up that we have not seen. Meanwhile, pay has been slow. Well, we know that. And it's hard bringing people back in, but it seems like it's happening. That's from Raymond Stone. He's at Stone and McCarthy Research Associates in Princeton, Maryland. Well, yeah, there are some. And the Wall Street Journal here, this is the BBC. I'm sorry about that one. But we do have a Wall Street Journal article here. Now, get to the G20 here. G20, this is from the Times of India. We won't spend a lot of time on it, but this is known as the Hamburg Action Plan for Promoting and Ease of Doing Business Labor Reforms. This is as far as India, acknowledging steps have been taken by India for sustainable and inclusive growth, as well as support to global economy. The G20 has praised the initiatives in the country promoting ease of doing business, startup funding, and labor reforms. The group noted that the financial sector in India is popularizing a number of derivative instruments in exchange and electronic trading platforms. Those are some things that you see in many, many countries now. But India is facilitating external commercial borrowing by startups in order to encourage innovation. You have, of course, macro lending on the lower end, promoting ease of doing business as part of an effort taken by the G20. This is something that is global. Out there, the World Bank ranked India a low 130 position last year in improvement, and just one position from the previous year. Now, that was ease of doing business. When you talk about ease of doing business, there are many things that are happening there. The Indian economy is a mixed economy. Many things in the Indian economy are still nationalizing for very, very good reason in India. So you'll see that happening here. Let me just finish this up. China is improving its business environment and ushering in foreign investment, while the European Union is fostering investment with a proposal to extend the European investment plan and increase overall flexibility of the EU budget to support job creation. This is happening all over, not in the U.S. in terms of job creation, other than the incentives by the Trump administration to open up federal lands and ease regulations in the fossil fuel industry, basically speaking. Also, malicious use of information technology. This is from the Indian perspective here, and this is the Hamburg Action Plan, the overview here. This is from the G20. It sets out a strategy for achieving a strong, sustainable, and balanced inclusive growth. We believe that close partnership and action by The G20 members will boost confidence and contribute to shared prosperity. We have developed an action plan against a backdrop of improving growth and job prospect. However, the pace of growth is still weaker than desirable, and downside risks remain. Weak productivity, same thing as in the U.S. growth, income inequality, and aging populations. Same problem the U.S. is coming upon. Germany has a big problem there, and then you start to talk about immigration, and that is one of the big reasons for immigration in Germany is replace key parts there. While enhancing economic and financial resiliency, monetary policy will continue to support economic activity and ensure price stability. This is the same role the Fed in the U.S. plays. Fiscal policy will be used flexibly and growth-friendly, prioritized high-quality investment, and support reforms that will provide opportunities to promote inclusiveness while ensuring debt as a as a share of GNP is on a sustainable path. And that is one of the reasons in the U.S. you have Sarbanes-Oxley and various other types of Dodd-Frank that keep the financial system under close scrutiny. That is the reason we talk about now. Chair Yellen was saying another major depression would probably not hit in her lifetime. I'm not as optimistic as that, but again, defining depressions as recessions is amount of quibbling. We can carefully calibrate and clearly communicate our macroeconomic policy action and structural reforms to reduce policy uncertainty, minimize negative spillovers, and promote transparency. We will strive to reduce excess global imbalances in a way that supports global growth. We will promote greater inclusiveness, fairness, equality, and pursuit of economic growth and job creation. Now, there's not a lot of this talking about the emerging nations here. Looking through here, monetary policy. Now, here we come upon it. The policy stance continues to remain accommodative in Australia, Canada, the Eurozone, Saudi Arabia, South Africa, the United Kingdom, and the United States. The Bank of Japan introduced qualitative and quantitative monetary easing with yield curve control as a means of strengthening the previous framework for monetary easing, with a new view to achieve a price stability target of 2% as an early possible time. Brazil's monetary policy stance has become less restrictive, and the policy interest rate having fallen 400 basis points there. Fiscal policy. China will further ease their tax burden on businesses by around 380 billion yuan and cut business-related fees by about 720 billion yuan. Turkey is extending its minimum wage subsidy and waiving personal income tax and stamp duty liabilities for every worker participating in the labor force until the end of the year, actually. So these are some things that, the reason we put this in, these are some things you're not hearing out there. Argentina, Brazil, and Mexico are implementing multi-year fiscal consolidation plans to secure fiscal sustainable and preserve macroeconomic stability. Germany envisions that the general government debt to GDP ratio will fall below 60% in 2020. Australia will provide 1.5 billion Australian dollars over 4 years from fiscal year 17 to 18 to establish a permanent Skilling Australia fund to support the skilling of Australian workers. Canada, a broad range of infrastructure investment to build, modernize, and resilient neighborhoods and communities. China is improving its business environment. The EU is fostering investment with a proposed extension to the European Investment Plan. France, we hadn't heard much from them, has enhanced its already effective anti-corruption framework. International standards and taking steps to increase transparency, modernize the economy that should support productivity and attractiveness. So this is kind of a roundup of what some of these nations are doing here. We won't spend much more time on this, but this is some of the information coming out of there that has not been available in the press as such. Supporting global economy in the short term, demand side measures are important for supporting confidence and strengthening growth over the short term. Can complement structural reforms designed to yield results in the long term. And we already covered that part of it. Let's move on down here. Inclusive growth is talked about here. South Africa is introducing a national minimum wage in 2018 to protect workers and increase the living standards of the poorest citizens. Cover a little bit more of this. IL is adopting a comprehensive strategy to spur inclusive growth, especially amongst the most vulnerable groups, including women, youth, and notably through the introduction of the minimum income scheme and the monitoring of sustainable well-being indicators in place. South Africa, we already touched on it. Korea is building a fair economy and ecosystem by means of supporting micro, small, and medium-sized enterprise ventures and startups, improving the quality of jobs, establishing a fair order in the marketplace. Mexico is creating special economic zones to increase productivity, boost employment, create wealth. Russia is improving financial inclusion for households by developing remote identification of individuals, including remote opening of bank accounts. Supporting individual enterprises through promoting credit to entrepreneurs and its secularization expansion guarantees elaborating the single window mechanism for state approval programs. Saudi Arabia is developing a national household allowance to provide a social safety net protection to low-income workers, something they have not done. Spain is undertaking reforms that promote access of citizens to the labor market, with particular emphasis on active employment policies and adequacy of human capital. South Africa introduced programs such as youth employment schemes to promote opportunity for young people to gain work experience. Turkey is increasing employment of groups requiring special policies through a number of entrepreneurship programs. In the United Kingdom is providing funding to increase supply of new homes, including the construction of additional affordable housing. This all sounds like things that have happened in the U.S. Argentina, $70 billion for transportation infrastructure. 300 billion U.S. investment in maritime and rail and aero infrastructure. Austria is committing 7 billion Austrian dollars for transportation across Austria, including a national rail program for urban and regional rails. Brazil is implementing an adequate and simplified specific framework for micro entrepreneurship and individual micro entrepreneurs. Germany is supporting the provision of acquisition grants to private investors investing in youth innovative companies. Some of what these people are doing here, France is going forward with flexibilization of labor market by, amongst other things, further rationalizing its labor codes and investment in more in training of the unemployed and low qualified workers. Indonesia developing national logistics programs to ensure effectiveness and effective and efficient flow of goods, as well as improved competitiveness. Italy's Industrial 4 plan, boosting of productivity and competitiveness by Italian firms and promoting investment in skills. I won't go into all these, but some of the things we don't hear about. U.S. as part of its stimulus program to implement major reforms of its tax system to encourage investment and growth. Not much have been said about the U.S. here. Intends to reform regulations across the broad sectors of the economy. Some of these can be positive, some can be negative. In Russia, increasing the capital of Industrial Development Fund to expand its loan support for newly created industrial enterprises. So those are some of the things. Now let's go over to the BBC. Shoppers in the dark about Brexit's effect. UK, shoppers are completely in the dark about the effects Brexit will have on their weekly shopping. That's according to the former Stansbury boss there, Justin King, who ran the supermarket for a chain for a decade, 10 years, the main supermarket, and declined to speak to Panorama. That's a BBC program. Nonetheless, that makes it less efficient, which means all three of those benefits, price, quality, and choice, go backward. Brexit almost in whatever version, if introduced, will introduce barriers. In other words, there'll be less of everything available. What they said, King said, the weaker pound will push up prices. Added that the EU membership helped retailers find the best supplies and markets throughout Europe. Now, and also tariff problems here, scarcity of imports. Some British farmers fear that a bad Brexit deal, which does not protect them, could drive them out of business. No doubt about that. Agricultural farmers in Wales, I really am scared of imports produced to compete with different standards of hormones and, feedlot beef, etc., etc. Where do we buy our beef from? And this is the UK's, from the EU, 22%, homegrown is 76%. They seem to be okay there. But in the UK, less than 1% of fresh and frozen beef bought last year came from the US. So, in other words, any US deal here doesn't mean anything to them. We don't want to destroy any industry within another country. This is the Cattlemen's Association in the U.S. It would be up to your consumers. The Prime Minister has already been driving for new deals in America. Well, it won't work out as well. And she's definitely on the hot seat. We won't spend much time working there. Let's do the numbers now. This is the markets. The BBC Global 30 on Sunday was at 1,001.14. That's interesting. Nonetheless, the FTSE All-Share on these are on Friday, unless otherwise noted, at 7.02. In Amsterdam, negative 0.02. The DAC is 7.43 on Friday. In Paris, they were at negative 7.24. In Brussels, 12.89. In Madrid on Friday at negative 9.60. In Zurich, negative 3.68. In Moscow on Friday, negative 3.24. In Johannesburg, negative 294.82. In Bombay on Friday, negative 8.71. In Karachi, 399.04 in the positive. In Lahore, negative 45.11. In Colombo, 23.16. In Tehran on Sunday, 103.80. In Sydney on Sunday, we're coming in here for Sunday, negative 21.30. The Nikkei at 115.25, that's Sunday also. In Hong Kong, the Hang Seng, 202.64. In Shanghai on Friday, 5.41. In New York on Friday, 94.30. The Nasdaq at 63.61. The Merck, that's the commodities market out in the Midwest city of Chicago, at 15.43. In San Pablo on Monday, 1,046.17 in the negative, and in Mexico on Friday, 648.41. Let's look at the commodities as we start to wrap up here. Brent crude futures on Friday down $1.25 at $48.86. The spot on Thursday was at $50.29. It was up $2.78. West Texas Intermediate down $1.20 at $44.32. T-Boone Pickens still jumping for joy. He remembers literally $15 a barrel oil. Gold on the Forex index was down $3.90 at $1,220.40. Dubai Gold Futures, this is at an ounce here, was down 80 cents at $1,224.70. Silver was down 17 cents at $15.84. Unex Life Futures, cocoa was down $22. Robusta coffee was down $42. And the Bloomberg Commodities Index was down 0.61 or 61 cents, how you want it. That was on Friday, and 81.80. So that's the Bloomberg's index, and this is provided to BBC by digitallook.com. Everybody's at a .com these days, so we go there. Currencies. We usually don't do currencies, but $1 buys 1.298 pounds. So we start looking at what a pound buys in terms of yens, and a pound buys 147.36, and we won't do the rest. Yen, and just looking down some of these here. I wanted to especially look at what is going on. This is the Mideast, the Americas, and wait a minute here. The euro at 1.13, and this is for pounds. Unfortunately, we don't have it for dollars here, but we were looking and we don't see it for France, and for some reason it doesn't come up, and we just don't have it. So since we don't have it, we won't have it here. One reason we don't usually do currency, because the currency is such, well, if we do, wait a minute here. We can do U.S. here. We won't go through much of this, but $1 buys 0.876 euros on change there, and if we look at the Canadian dollar, $1 buys 1.228 Canadian dollars. Canadian dollar is usually always weaker, but anyway. And 17.9565 pesos to a dollar. So we'll take a quick look at the Canadian dollar here. Yeah, dollar buys, well, almost $1.30 Canadian dollars if we look at that, where the Canadian dollar is. And I was looking for France here, and I don't, unfortunately, see France showing up here. But anyway, I suppose we'll have to catch it later here. The pound, where the pound is, I don't know why we're dwelling on this. We usually don't. Dollar buys, 1.77 pounds. So there you go. The pound is down. That's one way of putting it right there. And the dollar rolls along. Anyway, this will do it for us. For those in business, make next week a productive one. For the consumer, keep your eyes on the ball. We really didn't get into consumer pricing here. We had hoped to. Let me just check real quickly here. From the Reuters service, I don't think, we. Yeah, Wells Fargo is close to reaching $142 million phony accounts settlement, they claim. And let me just go to Asian firms on Wall Street cheer after U.S. job data, according to this. Rose on Monday. You just heard that, a robust stock market there. The Nikkei was, of course, up 0.7%. The Australian was up 0.3%. The Hang Seng gained 1%. And on Friday, of course, we won't go back to that, but the Nasdaq gained a percentage point. And 10-year Treasury, we haven't talked about that, hit a 2-month high at 2.398% there. And the dollar inched up 0.2% to 114 yen. I guess they also talked about it. The Bank of Japan is nowhere near its exit. The euro was a little bit lower at $1.14, effectively what it was. And let's see, Brent crude rose 0.8% to $44.59 on Monday, making up for 2.8 on Friday. In other words, Brent crude is up. Brent crude is down, nothing unusual there. Gold was down 0.2% at $1,220.92 to a 4-month low. So nothing there spectacular. So that's the latest there. Anyway, for the consumer, definitely keep your eyes on the price. Good day.